Okay, so welcome to another installment of uh, this video series I do on this channel called Please Fix Thanks. In this video series, we look at large losses that are suffered by day traders, and we look at the charts. We break it down using our Romeo Turtle Soup. We use our ICT framework. We look at the charts. We tell the story. It's kind of a light, more fun thing that I try to do on this channel, and it's helpful because if we can avoid the mistakes of others, then we'll be doing great for ourselves. So today I'll be talking about not a day trader loss, but more of an institutional level blow up that happened. The firm is called Situational Awareness, and it's Leopold Archibrenner. I don't even know how to pronounce his name. But anyways, it's a very, very large hedge fund. Was a very large hedge fund. I think it's back now and it's like growing again, but it had a liquidation event in late July that involved a lot of shares being handed off and changing hands. So before I get really into the video, did you guys know that killer whales, orca whales, have this like learned behavior where they'll all swim together and create these subsurface waves that break up the ice that their prey is sitting on? It's just kind of like a random tangent, but I just thought it would be like, it's a cool science fact to start the video. These very large whales, they use their extreme mass and strength to swim together to make their prey easier to take down at a specific moment. So anyways, on to the next slide here, if I can actually get to the next slide. Here, let me just do this. Little presentation error. We'll do a little of this action. There we go. Okay. So here's the publicly known facts about situational awareness. Still fairly late breaking, I think, though I think more and more is known as the weeks pass. But basically, they had around a 67% loss on their portfolio reported for July 2026. The way that this resolved was that they sold many of their public equity shares to a large institution, including Citadel. In other words, they made a deal to essentially like save them from, let's say like bankruptcy or other ways of closing. And so they end up transferring all these shares because of these extreme market movements in very select few publicly traded tickers, as well as their kind of like marking to some sort of market in their private equity, like Anthropic. So they were a fund that had an extremely meteoric rise, like a 400% gain in the past few very few years, and they're extremely heavily concentrated in the AI names, AI infrastructure, and AI related like data centers type of investments. So basically, from mid to late July, these ticker stocks declined sharply, as well as like the valuation of the private equity shares. And then this all culminated in late July, where they're essentially like using leverage with prime brokers, and so they essentially get margin called in late July. Um, so the kind of the details of this margin call is that in order to satisfy their margin requirements, they have to sell and they have to like basically liquidate in order to have cash. So there's that whole idea of like this forced liquidation. So what I'm going to do is, you can't really break their entire portfolio down into a single chart, but I'm using kind of like a, like very shorthand, very informal way of like, if we can track a ticker which represents the core of their public equity holdings. And so I've settled on Nebius Group just to make this analysis a little bit easier. Can we look at a Nebius Group chart and can we see, a turtle soup? That's really the point of this video. And this, again, we're not making any, bold claims here. We're just looking at something in hindsight. We're looking at a blow up. But the important thing is you don't go from being like the largest hedge fund, which, I remember hearing commentary about how it was interesting that this hedge fund, Situational Awareness, was based on the West Coast. And I believe this was the first time where the largest hedge fund was based on the West Coast of the United States as opposed to the East Coast. So anyways, it is no longer the largest hedge fund. And so now that trend has now mean reverted, and now we have the largest hedge fund on the East Coast. Anyways, but you don't lose $16 billion without being turtle souped, right? So that's the whole point of this, is just to look at this in terms of the please fix framework and look for turtle soups. So here we have a chart of NBIS, which is the Nebius Group holdings, which is a good proxy for this situational awareness fund. They're very long only, despite being like a quote unquote hedge fund. They're essentially like they acted as like a levered way to get exposure to AI names, and particularly like in the private equity space. But since we don't really have like charts of that, then we're kind of forced to just like use this Nebius Group here as a proxy. But it works really well because when at the culmination of, and you can see here if you're already looking at the chart, in late July when they had their liquidation event, Nebius Group had fallen from a high of nearly 300 all the way down to 150. So that's a 50% loss in that 6-week period, right? So clearly this is some sort of 6-week model playing out, right? Now it's not the 2023 model perfectly, because not my 2023 model, but the 2023 model that I choose to trade, going back to like the Romeo stuff, there needs to be a lot going on here on the left side of the chart. In other words, I like to see a big bearish candle and then a pause CRT that forms rising trendline liquidity, and then one final, perhaps like, a CRT or a turtle soup, to be more specific, a bearish turtle soup above the original fast downward displacing candle. But of course, because this is this highly levered up, because this is like a speculative public equity where it's like this, people are just betting on growth and betting on growth and betting on growth. And it's like, using leverage to accumulate more and more and more. Well, you don't really get that perfect model, but you still get a model. It's look at the symmetry of this. I mean, this was a CRT. This whole thing starting in May 1st was a CRT, right? And so if you want to think about those whales swimming under the surface of the ice to break the ice, like this could be, if you did a total forensics analysis of it, this whole move could have been very much a market manipulation. In other words, you build this up over these 6 weeks, you have the CRT high, right? And then you have a bearish turtle soup, and the whole point of this slide is within this range here. So if this is accumulation into peak manipulation, into distribution, that's a 2023 model. And then there's another smaller one within this. So that 10 bar into 3 bar right there, that's what that move there is also a 2023 model. And then here, already having, starting here, right? Then there is another 2023 model. So if you take in, the second week of July, if you start there and you say, well, that's an origination candle, that awkward one with the no, where the candle opened and it just dumped, and then it dumps into there, but then there's there's that inducement low where it comes in. This high, as we turtle soup within this gap at the 50% of the entire range, this high that forms, that's a bearish turtle soup. That's a 2023 model. And it's that 2023 model that acts as the kiss of death to get the Nebius group equities all the way down to 150, right? Below the May 1st lows. And this is when you have the blow up liquidation of situational awareness. And then that weekend, it was like many, it was actually a really big day for Martin Shkreli. Like he's like he's a popular alternative finance person. I think his nickname like many years ago was the Farmer Bro, but he's got his own fund. He's got a company that does like financial services. But anyways, he was the one who was like leaking a lot of news over the weekend about this transfer of public equities. And the crazy thing is this whole thing is a 2023 model. In other words, this whole episode that started with this accumulation into manipulation into this distribution of this CRT here, right? But then this whole thing is accumulation into manipulation. So the manipulation is the blow up of situational awareness, and that serves as the quote unquote bad news at the bottom, which is something that Romeo has said. And this itself is bullish. So in other words, this whole setup took around 200 I guess this is a daily chart. Yeah, so 200 trading days. And that sets us up to rip higher, perhaps even to the 300 key level, because we never actually hit 300, I don't think, in this particular equity. But it's just incredible. So it just makes me think of like that coordinated action of that predatory behavior. The predator being like the larger funds that were able to take advantage of the forced liquidation. One of the best ways to make money as a large fund is to be able to like, I think Warren Buffett used to call it like picking up the cigar butt, but it's essentially like being able to be sold an asset at a deeply discounted price because somebody else is forced sale. It's a forced sale of an asset. And so this at peak manipulation happened to be the very what became very public forced selling. Now, stuff like this happens under the hood, behind the scenes all the time. But this one was fascinating to me just because it was so public, with just the young billionaire there, Leopold, making the rounds, and just like, it was just such a good dramatic news article with the handover between Leopold, all with the forced liquidation there, and then Ken Griffin, who is the who runs Citadel, who's able to like scoop that up as like this, I can be the buyer of last resort. I can get you out of your bind there, Leopold. Don't worry. So it's just, I don't know. It's the whole thing is awesome. And it's cool that it's still like my particular model, which it's not some holy grail, right? You still have to work hard, but it's cool that it fits the model in terms of this whole thing is a CRT, and then after the completion of this, it becomes potentially a bullish entry. to get us back to just above all-time highs in this particular ticker symbol. So, what does this mean for NASDAQ? I mean, NASDAQ isn't like completely AI focused the way that this would be. So, that doesn't, just because we have a bullish tailwind in this particular ticker doesn't mean that, all US tech is going to be super bullish, until the end of August. But it definitely does have it definitely gives you like a little data point just to keep in mind. Like I'm planning on being long foreign currencies. I'm planning on going long things, and so it's good to see that the end of July was some sort of flush out of the so-called weak hands. And sometimes the flush out of weak hands is private and and kind of like unknown and anonymous, but this time it was very public and very full of drama, which makes this video more fun. But yeah, so thank you so much for watching this little live recording, and I hope you have a really good rest of your Sunday and a good